Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We have back on the show our resident commodities guru, Rick Rule. Rick, thanks for coming back on the show.
Always a pleasure. Thank you for having me back.
Yes, sir. Yes, sir. Got to say, your symposium was amazing. You weren't kidding when you said that there was over 50 hours worth of content. I'm about halfway through it, and it is well done, sir.
Thank you very much. We've worked almost 30 years to be overnight successes in the conference business. So I'm delighted that you found it of benefit. If any of your listeners would like to buy the tapes and have them available for the balance of the year, or rather buy online access, that's of course available at rulesymposiums.com.
I would highly recommend it. The one that really got my attention, and I've probably watched that 40-minute presentation 4 or 5 times, is the one that Jim Rickards did on the BRICS currency. And he so basically the BRICS have their meeting here coming up August 22nd through 24th, and he's kind of given his synopsis on what he thinks is going to happen. And he said that basically he thinks the BRICS is going to come up with a settlement system. This is not going to be currency that is exchanged, in the form of paper currency, redeemable for gold or anything. But he believes that they're going to peg, we'll just call it a brick, to a weight of gold, whether that weight is a gram, an ounce, or a kilo. And he said that they're going to kind of like piggyback off the dollar as far as figuring out what it's relatively worth. And he said then that if the U.S. were to try to get in the game and buy more gold to up our gold reserves from 8,000 tons to whatever else, he said that that would cause the dollar to fall, and then that's a checkmate in favor of the BRICS currencies. So my question is if the U.S. actually did that, if we added to our gold reserves, why would that make the dollar fall? And I don't understand. Is it because they're taking so much supply off the market, creating diminishing supplies, which would, feed demand?
Well, it depends on how much gold they bought. If they increase the number of US dollars in circulation and reduce the amount of gold in circulation, the gold price in US dollars would rise. It's an open question as to what would happen to the US dollar price relative to other currencies. Understand that the free float of gold relative to the free float of currency on a global basis is infinitesimal. It doesn't matter. I listened to Jim's presentation with interest, as I always do, because of Jim's background, being general counsel at Long-Term Capital Management, as an example. Having an insider's view in a circumstance that almost brought down capital markets worldwide gives him a unique perspective on catastrophic events. My view to the BRICS currency is different than his. I agree with him that if it comes to existence, it will not be a currency. It will not be something that you or I or Chinese citizens or Russian citizens own. It will be, in fact, a settlement mechanism. But for a settlement mechanism to exist, you have to perfect settlement. That means that all of the countries that are signatories to the BRICS agreement, in order to participate in the BRICS settlement system, would need to contribute sufficient gold to the bank that they could effect settlement. Otherwise, can you imagine, as an example, the Chinese running a large trade surplus with Russia and going to a Putin, who still has his gold, and saying, we'd like our gold, please. And Putin say, well, here's some bricks. Not gold bricks, but rather bricks. The problem with that is that the 45 countries that have applied to the BRICS for admission mostly have no gold, which means if it occurred, it would largely be a surrogate bank controlled by the Saudis, the Iranians, and the Chinese. My suspicion is that the other 42 applicants to the BRICS system, while they don't trust us more than they trust each other. If I'm wrong, if in fact there is a settlement mechanism a credible settlement mechanism that arises outside the US dollar. And if sufficient cooperation exists that countries are willing to subsume their own gold reserves to the settlement system, that would be a truly interesting state of affairs. The GDP of the applicants to the BRICS system is larger than the GDP of the G7. And so the potential exists for a settlement mechanism outside the US dollar that, if it occurred, would weaken the US dollar dramatically. Notice that I said if, Steve. My suspicion is that this won't occur in my lifetime. And for the record, I'm 70.
Okay, I'm going to share my screen here real quick. Now, I pulled this off of the World Gold Council website, and so that's where I'm getting my numbers here. But this is tons of gold per country. Here's what the U.S. got, 8133. Now, we're 4.3% of the population, and these are the BRICS right here, and that is their how many tons of gold they got.
Yep.
Which totals about 5,500 pounds. So these four countries make up about 40% of the world's population. And I guess by that metric, they should have, 10 times what we do. So this is what you're saying when you say that these countries have no gold, right?
Correct.
Okay.
Relative to the size of the settlements that they would like to affect.
Yeah.
It's important to note, too, that a lot of that gold is used as at least as implied in some cases as explicit guarantees for external debts, which means it can't be contributed to a BRICS bank because it's already been pledged as collateral to foreign denominated obligations. The Egyptian gold, the Indonesian gold, the Brazilian gold.
Okay.
You likely can't repledge it. So in addition to looking at the gold holdings of those countries and their GDP, you also need to look at their external balances. And their external balances relative to things like their trade balances and their budget surpluses or deficits. This is not, with a couple of exceptions, the Saudis and the Chinese, an aggregation of the strong.
Okay. Yeah, the Saudis had, I put them down as an honorable mention. I don't remember the exact number here, but it wasn't nearly what Russia and...
At least they run consistent trade surpluses.
Okay. They got so much
oil. To the
oil.
extent that the Saudis have gold, it's unlikely that gold serves as collateral to external obligations.
Okay. All right. It's not promised somewhere else.
Correct.
Okay. All right. Okay, we got some questions here. Starting off with KI25. Rick, if you hadn't become an investor, what would you have become?
Either a teacher or a felon.
I like teaching.
I like teaching a lot, but I'm fairly adventurous. Perhaps I would have tried to be an author or something like that. But the truth is, at heart, I'm a credit analyst. It's what I like doing. And that led naturally to a career in investing.
Okay. Yeah. There was no plan B.
No, I mean, perhaps some type of entrepreneur. I like seeing holes in the market and trying to figure out ways to service those holes.
Yeah. Okay. All right. Pocket Queens asks about percentage of portfolio. So let me give you a kind of a macro of our audience. Our average listener is a 40 to 55-year-old male, net worth about $1 million, portfolios about 200K. If you had to divide that portfolio up into cash, gold, silver, uranium, and oil, those five, how would you divide that up as far as percentages?
It depends an awful lot about the rest of the person's life.
Yeah.
Like their income and their savings relative to their expenditures, the number of dependents they have, how much risk they could take. I'm not ducking the question, by the way. People look for one size fits all answer when there's hundreds of millions of sizes out there. So it's very difficult to do. I would believe, for most investors with $1 million net worth, that they have the ability and they should have the desire to maintain substantial equity. It's only rich people that can maintain liquidity, because liquidity costs you. If you have a bank deposit or you hold gold, it doesn't pay you rent in excess of the depreciation of your purchasing power through inflation. So you have to have wealth to have liquidity. I say you have to have liquidity because in the 49 years I've been investing, once every 10 or 15 years, you have a liquidity squeeze, an event like 2008, which causes the price of everything to fall by half. And if you have cash in a circumstance like that, you take advantage of the circumstance rather than being taken advantage of by the circumstance. So I would ask right now that your listeners, as you describe them, have between 10 and 15% of their portfolio liquid. Liquid can include gold if you're actually willing to sell it, if a more attractive asset comes by you. And the rest of the liquidity needs to be in very short-term, short-denominated obligations. I start with liquidity. It's difficult for me to understand why anybody who is fairly young, and I would describe at age 70, the audience you describe as fairly young, wouldn't have 5% of their assets in physical precious metals. Certainly physical precious metals that were things like the Sprott Physical Gold Trust is okay. But physical precious metals, I regard that myself as volatile, but good liquidity. I see the circumstance in front of us as one where the purchasing power of fiat alternatives is declining, and knowledge of the fact that the purchasing power of fiat alternatives is declining, and when one where the increase in the price of gold relative to fiat alternatives is a very attractive. No guarantee, and I can't tell you in what period of time, but Steve, I would love it if when I died, the price of my gold hadn't increased. That means the price of all my other stuff did okay, and that would be a fair trade for me. I think that your investors, particularly of this age group, need to understand the demographics of natural resources, which is to say, we have underinvested in productive capacity around natural resources for 30 or 40 years. There are 8 billion of us on the planet, and we've done a great job over 40 years raising the living standards of the poorest of the poor, and we're going to continue to do that, which means that more and more people will be able to compete for access to material with you and I. In a world where we haven't invested enough to maintain current levels of demand 5 to 7 years out. When you follow this thesis in resources, you need to understand that the thesis will be delayed if there's a recession. And I think a recession is more likely than not to occur. I'm no economist, but I temper my own optimism with resources with the sense that it's likely that we're going to have a recession. That being said, in a society like ours that is as underinvested in natural resources as ours is, I think it's a mistake to have less than 20% of your portfolio in natural resources. I think it's a mistake too, unless you do a lot of work, to have more than 35 or 40% of your portfolio in natural resources. And I think for most of your listeners, the resource stocks that interest them are sub-billion market cap, alpha-oriented investments, where most of their money should be invested in much larger, beta-oriented investments that pay them a dividend, so that if the capital appreciation takes place 5 years from now rather than 2 years from now, that their investment will have paid them rent in the interim. I hope that answers the question.
Yeah, you're basically saying, okay, so I heard 10 to 15% liquid as in cash or in something like rolling treasuries.
Yep.
And at least 5% in physical precious metals.
And that can be part of your cash if you're actually willing to sell your gold.
Yeah. I came across a scenario like that recently, about 1.5 years ago, where I bought a house and, gold did exactly what it was supposed to do. I got it at 15. What did I get it at? 1,500 and then sold it for 1,650 a year and a half later. I mean, it was that was pretty cool. Had I kept that in paper or sitting in a bank account, it still would have been 1,500. You know what I mean? That was cool.
Important to note, Steve, too, as a commercial, Battle Bank in organization will lend you money on your physical gold. So you can both keep your gold and access liquidity to buy your house simultaneously. Battlebank.com.
Shameless plug.
Absolutely.
And then in natural resources, 20 to 35% for someone that is not going to study as actively as they should. And you're right. A lot of our listeners and a lot of the questions that come in are all alpha driven companies. And I look up their market cap and it's like 40 million or something. I'm like,
right.
Man,
yeah,
BHP is a pretty good buy right now.
Steve, I've graded now almost 80,000 portfolios in 6 years.
Wow.
I see way too little BHP. I see way too little Cameco. I see way too little Exxon, way too little Chevron. Those stocks should be 75% of the portfolios that are sent to me.
Yeah.
And they aren't.
Yeah.
Most of your listeners who are young don't understand how dramatic natural resource bull markets are when they occur. And the truth is that big companies can give you penny stock moves. Big companies can give you 3 baggers or 4 baggers. They can't give you 15 baggers, but the increase in price that you get is more certain with a big company, and they pay you rent while you wait.
Yeah.
You can take away, particularly at age 70, some of my upside. If you take away most of my downside, I'm good with that trade.
Right on. Yeah, I love an oil. That's a good one. Okay. Fire Dude asks about SilverCrest. We had their report come out recently. It cost them a little bit more to pull it out of the ground than they thought. Although their recovery rates are a little bit better, that doesn't really make up for the fact that. What are your thoughts on SilverCrest?
That was very disappointing. I really, well, I had a lot of money invested in SilverCrest. Let's get that one out of the way. The report was distressing for 2 reasons. The plant is working well, but the continuity of the deposit underground is not as good as we had hoped. And importantly, the recoverable reserves and resources are much less than we had anticipated. There is a lot of room left in the deposit for exploration, but the comfort I had with the deposit 6 months ago, the anticipation that I had for reserve reconciliation is much lower.
What is it now, a 5 or a 6?
Well, the price has fallen so much that it's only gone from 4 to 5.
Okay.
The net present value of the deposit at strip is about $700 million. And the enterprise value of the deposit, adding market capitalization with net debt, which is fairly small, is $620 million. So in effect, it's fairly priced, and I'm getting the upside in the silver price and any exploration upside for free. It's also true that if I get any exploration upside, that it's not unlikely that an acquirer will buy the company if the share price doesn't go up, because the acquirer won't be priced in the market at net present value, but rather at a cash flow multiple. In the odd calculus of public company mining math, if a premium priced company buys a lower priced company, even in a way that isn't book accretive, it becomes accretive on an earnings basis. So you do have that, but this isn't one for the faint of heart now.
Okay. All right. On that subject. Okay. Football Crest and Danny asked the same one about Aya Gold and Silver.
Aya Gold and Silver is expensive on an earnings basis. They are not expensive on a reserve and resource basis. They are run by a very, very, very good guy. It's no longer cheap. Aya, you could argue, going back to the time of our Silver Investors Bootcamp, was cheap, but it's almost doubled in price.
Yeah.
So it's no longer cheap. Are you willing to pay up for a great asset with great people? That's the question.
Okay. A 6?
I have it as a 6.
Okay. All right. Still on silver. Pregler. Mag silver. That one's gotten cheaper lately. Did something change fundamentally with the company?
No, MAG has gotten cheaper. I think because of the political risk in Mexico, evidenced by the appointment of the former environment minister as the mines minister, and the obviously anti-mining stance of AMLO, the president of Mexico. I think it's arguable that both the reality of political risk and the perception of political risk in Mexico has increased. It has also, I think, been challenged over the fact that many investors don't believe that the company can be taken over except for by Fresnillo, the 54% operator of that deposit. My own belief there is different. I believe that a minority interest in a deposit of that size could likely be sold to a royalty and streaming company who would be happy to enjoy the passive income from the deposit, or who would resell the deposit back to Fresnillo for a combination of a royalty and a stream. I'm less concerned about the liquidity than the market is.
Okay. Okay. What's that one? 4 or 5? 5. Okay. Platinum question. We talked about platinum a couple episodes ago, I think. Rick's view on platinum. We've gotten down. I didn't check the spot price today, but it's got to be around 900 or so. All the fundamentals are still in place for that, right? I mean, the power issues that they're having in South Africa right now are actually kind of nice for a physical platinum bet, right?
I'm an owner of platinum, despite the fact that I think we're more likely than not to see a recession over time, which will constrain demand for internal combustion engines. I own platinum because it's produced in 3 places: South Africa, Zimbabwe, and Russia, none of which are paragons of stability. Any advancing geopolitical concern in any of the 3 countries, and the probabilities are endless, means that platinum supplies plummet. And if platinum supplies plummet, platinum prices can soar. Here's why. It takes about $125 worth of platinum to equip a catalytic converter that enables the sale of a $50,000 or $60,000 automobile to take place in a Western nation. Absent a political movement to allow more smog, which I think is unlikely, if you had a supply shortfall, it would be easy to double the price of platinum without changing the price of the product that platinum is used to sell. The utility of platinum is so high, and its price is so inconsequential in the finished price of the product that it enables the sale of, that in the event of a supply shortfall, the price of platinum could double or triple without impacting demand for platinum.
Same kind of argument, I guess, with uranium and
Exactly.
the fuel for nuclear power plants, right?
Exactly.
The price could double or triple, and it's not like they're going to stop running these things.
The difference is that uranium comes from a lot of places. Can come from a lot of places. As an example, the potential disruption of supply from Niger didn't impact the spot price.
Yeah.
If either South Africa or Russia went down, Zimbabwe could go down without impacting things too much. But if either South Africa or Russia went down, that the turmoil in the palladium and platinum market would be extraordinary.
Yeah. Yeah. Okay. Okay. Maybe that's when we would return to 2 gold coins for 1 platinum coin instead of the other way around or something. Okay. All right. Well, you just kind of hit on it. What with the recent coup in Niger, maybe you just kind of tell me if I'm off the mark here or not, but that uranium isn't going to all of a sudden, go up like a candle in the wind.
Correct.
It's going to go somewhere, right?
Right.
Maybe they no longer sell it to the US or France or wherever, but they're going to sell it somewhere, and then the US and France are going to buy it somewhere else, right? Is our biggest risk with this that simply because of where we're located on the planet, we no longer are able to buy that company, or but it's not like that those mines are going to go away, Goviex and Global Atomic, right?
There isn't a risk to the uranium market at all, as you say. If that uranium is diverted to different markets, then uranium that serves those markets will be free for the markets that were deprived of uranium from Niger. I also believe that in the case of Niger, that there is the possibility of political accommodation. I think from the point of view of Goviex and Global Atomic, that their progress is set back at least a year. It'll take a while to work this out.
Okay.
I'm no geopolitical analyst, but I myself have operated in countries that were deemed to be hostile to the US for a very long time. And while I had one recent failure, which is to say Russia, which treated me well for 22 years until it didn't, I need to say that in my own experience, political risk is over-dramatized by investors relative to financial or technical risk. People seem to want a lousy deposit in a country they perceive as good, rather than a great deposit in a country that they perceive as lousy. And that has been, from my point of view, exactly backwards to what successful speculators do.
Okay.
Yeah, I invested in Congo all the way through their civil war. And I'm not trying to say that I wasn't subjecting myself to risk. But an example would be I was able to buy shares of Tenke Mining, a company that controlled the then largest undeveloped copper deposit in the world, best one too. It had 30 cents a share of cash in it. It was selling for 19 cents a share. So it had 11 cents a share more cash than it had market capitalization. And it was run by the Lundins, the first family of mining. And so I thought, okay, so what's the most I could lose on this? Well, 19 cents, all the money. What could I make if things worked out? 10 bucks, 11 bucks? I was wrong. It went to 18 or 19 bucks.
Wow.
The point was that there was a juxtaposition between losing 19 cents and making 10 bucks. If you have money that you can afford to lose all of, you take that risk in measure.
Yeah. There's a lot of similar bets like that in poker. You know that you're not a favorite to win the hand, but if it works out, then you get 4 or 5x.
Yep.
Okay.
Or in this case, 100x.
Yeah. Yes. Oh, you mentioned Russia briefly, and what with the Polymetal recently they're moving down to Kazakhstan. What do you see with that company?
The following does not constitute investment advice.
Okay.
I'm not a lawyer. My understanding is that Polymetal will sell or transfer the Russian assets to a Russian company, and that Polymetal will put the non-Russian assets and the receivable from the sale of the Russian assets into a Kazakh listed vehicle, which will seek to relist on the London Stock Exchange. If that occurs, I think it's a wonderful outcome for foreign investors. Whether or not it occurs is a very different circumstance. Whether or not self-dealing will occur in the sale of the Russian assets and the receipt of proceeds from the Russian assets. But probably almost any circumstance that arises is better than the circumstance that you face now, and better than the circumstance that you face in any of the Russian stocks that I own.
Yeah. What a Lanko Bear asked, ask Rick about his Russian positions and what he's done and planning to do with them. Also, if he still believes they will pay out. I'm asking for a friend.
So my situation is different. Were I not fairly prominent and were I not starting a bank that had me in front of US regulators, I might be tempted to open an account either through a Swiss intermediary or directly with Gazprom Bank in Russia. And I might transfer my ADRs for Russian ordinary shares. The difficulty with that is that I get paid my dividends in rubles, which are not easily transferable into something that I can spend. The difficulty, too, is that that could be, although it's not certain, regarded as sanctions busting.
Mm.
And being involved in sanctions busting, if you have a bank in front of bank regulators for approval, is not a very smart thing to do. So what I've chosen to do is nothing. I have limbo. I have some London-listed shares, some American ADRs, where the dividends are being paid in rubles and accruing, and I can't sell the investments. In many senses, the worst of all worlds. My challenge isn't merely the Russian government, but the American government and the Russian government. And between the two of them, frankly, they're bigger than me, Steve.
Yeah. Yeah. Okay. Okay.
Now, I need to say, if you look back 20 years, those Russian stocks owe me nothing. For things like Gazprom, Polyrus, Polymetal, they have paid me a multiple of my purchase price in dividends. And in 4 of the 7 cases, I sold enough stock that I had the rest for free. I did compound the felony when the crisis first occurred of buying more, which is to say, trying to speculate on an outcome which I regarded as probable that ended up being wrong. The nature of speculation is that you have to tolerate being wrong, because being wrong is the price you pay for the outsized gains that you enjoy when you're right.
Yeah, I did the same thing when it started. I put more in. Okay, from Magaro. Do you prefer oil and gas royalties over silver and gold royalties?
Yes. Oil and gas royalties are better business, and they're more attractively priced in the market. The oil and gas royalties are priced, partially at least the U.S. oil and gas royalties and the Canadian oil and gas royalties, priced to reflect the preference of Mr. Biden and Mr. Trudeau that the oil business cease to exist in 2032. A highly unlikely event from my point of view. So the price to net asset value, the price to yield, and the price to cash flow, free cash flow multiple, sustainable cash flow, free cash multiple, much better in oil and gas than in gold and silver. The volatility in the stocks is much higher in the gold and silver, which is to say, you get more share market optionality relative to increases in the underlying commodity. But the investment stripped apart from its optionality is much better in oil and gas than it is in mining. At age 70, I've enjoyed a lot of optionality in my life, and I now prefer fundamentals over optionality.
Yeah. Yeah. And one of the best bets we ever made was when oil went negative $30 a barrel.
Yep.
Man.
Not
I am never selling that. Oh man. That was great. Okay, piggybacking on that, what jurisdiction is likely to have an oil and gas boom?
The one that comes most obviously to mind is Guyana, but there's no way to play it.
Okay.
You have a nation of 900,000 people that has 12 billion barrels of recoverable oil. This nation will go to per capita incomes of a developed nation within 24 months from being a deeply impoverished nation. I mean, stupid leverage upside. The easiest one to play is probably Canada. They have a hugely competitive oil and gas business, great natural resource endowment, great human endowment, pretty good infrastructure. And they have a guy running the country who doesn't see, quote, a business case for oil and gas, which is to say a certified moron running the country. The oil and gas will stay in place longer than he will stay in office. Meanwhile, you get dividend yields sustainable in 5 or 6 companies at least, meaning that they're making sufficient sustaining capital investments to maintain production while paying dividend yields that are 20 or 25% above capital markets norms. In other words, you get paid to wait for Canadians coming to their senses and allowing their prime minister to pursue other employment opportunities.
And hopefully he will. All right. Is there an oil and gas boom more likely? Is an oil and gas boom more likely to occur offshore?
I think that offshore will gain in stature relative to shales, simply because the shale boom is starting to mature. Offshore has been de-emphasized for 20 years because we've been able to increase, in particular, American and Canadian production via what was in effect a manufacturing rather than an exploration operation. The certainty, the exploration certainty certainly was 100%. But I think it's arguable that we are no longer in the early innings of the shale boom. That isn't to say that shale doesn't have room to continue to be an attractive industry, but I don't think that it will outpace offshore oil and gas to the extent that it has in the past. I think we are approaching in the United States, we're probably within 2 years of peak shale production.
Oh, really?
Unless exploration and in particular recovery technology expands fairly dramatically. We've drilled an awful lot of our prime locations, our A quality locations. Now we move to our B quality locations. One thing that hopefully we'll be able to do in the shale business is with an increase in technology, we will be able to retreat already treated wells and arrest their decline. And we will be able to increase recovery from B quality locations over A quality locations and extend the boom. But if you are concerned at all with the fact that technology moves in fits and starts, it may be that the technology that we're currently employing doesn't enable the increase in shale production to occur for longer than 2 or 3 years. If that happens and demand for oil and gas continues to increase around the world, then the outperformance of shale relative to offshore will begin to decline.
Okay. All right. Danny asks about Pan American Silver. What are the odds for Escobal?
I have been okay. Let's answer the question honestly. I don't know. I have been told by people who I believe are expert in Guatemalan affairs that the Escobal political situation will be resolved as early as 2023 and almost certainly in 2024. The share price in Pan American doesn't suggest that that's true, although I suspect that the share price decline in Pan American has a lot to do with Yamana shareholders who received Pan American shares selling their Pan American shares because they own stock in anticipation of a takeover. They got the takeover and they're turning it into cash.
Yeah.
If Escobal is restarted, investors need to understand that Pan American's silver production almost doubles from that one event.
Okay. Yeah. That's like free money if it happens.
If it occurs, yeah.
Yeah. Okay. All right. Let's see. Atomic. Okay. From Bill Smith. I know Rick is suspecting a liquidity event at some point, but will the already depressed junior miners go even lower if and when we go into recession? Since at some point the Fed will eventually be forced into lowering rates, or is the junior market on the whole cheap enough?
Well, first of all, the fact that I'm concerned about a recession should be taken in context. Between Doug Casey and I, we have correctly forecast 17 of the last 3 recessions, which is to say I'm always nervous about the economy, but I'm not an economist. A recession and a liquidity event are not necessarily the same thing. I don't know if we have a liquidity event that accompanies a recession or a recession that accompanies a liquidity event or both. I will tell you this. If you have a liquidity event, concurrent with the liquidity event, you will see the junior resource stock markets fall by at least half. Liquidity events affect tertiary, marginal assets the most. And there are no assets on the planet more marginal than natural resource exploration companies, taking exploration risk and commodity price risk simultaneously, and needing to raise money to continue in existence in capital markets that are shut. In the 1987 collapse and later in the 2008 collapse, the price of gold shares held up for 24 hours before they followed the rest of the equities markets off the cliff. Make no mistake, junior resource stocks are stocks, much more volatile than most, both to the upside and the downside. What you find in these collapses is that the high quality companies collapse along with the low quality companies, but the high quality companies come back, and they come back quicker. These liquidity squeezes are invariably, absolutely spectacular buying opportunities if you have the cash and the courage left to buy.
Okay. All right. Okay. You ready for lightning round company rankings?
Do my best.
Okay. All right. First one, Skeena.
Currently have Skeena as a 5.
Okay. Teuton.
Currently have Teuton as a 6.
Okay. B2 Gold.
Currently have B2 Gold as a 4.
Santa Barbara Gold.
Unrated. Don't know
Okay.
enough about it at present to rate it.
Artemis, is it gold?
I have Artemis as a 5, looking to upgrade it as a 4, depending on their construction progress in central BC. High quality people, nice deposit, challenge grade, a bit remote.
Okay. Go Gold.
Go Gold I have as a 4.
Gold Mining Inc.
Gold Mining Inc. I have as a 5, possible downgrade to 6, depending on their success monetizing their portfolio. Very well run. I just want to see more progress out of them.
Okay. Cassiar Gold.
Unrated.
Arizona Metals.
Unrated. Under review.
Kinross.
What do we have Kinross at? I don't remember. Kinross is either a 5 or a 6. More likely a 6 than a 5.
It's amazing to me. You can keep all 800 of these in your head. Okay. Global Atomic.
Global Atomic currently unrated. Suspended ratings, looking for some resolution of the outcome in Niger.
Okay. Same thing for Goviex?
Yes.
Okay. Vizsla Silver.
Vizsla Silver I have as a 5 with a possible upgrade to 4.
Okay.
Highly speculative. Understand, this is an advanced exploration project.
Not for the faint of heart.
Correct.
And Power Metals Corporation.
Power Metals I have as a 4, as a 5. Note that this is a sort of a process stock. You own it for their prowess at investing and underwriting. You're owning it, in fact, as a sort of a closed-end fund in the making through merchant banking. Note, too, that I'm the second largest shareholder, so I'm fairly prejudiced in what is a very, very, very closely held company.
Okay. And the last one that is always asked, First Majestic Silver.
First Majestic Silver, you need to see an outcome at Jarrett Canyon.
Yeah.
That answer is unchanged. This team is a fantastic team at buying large, underloved assets that have been starved for cash and turning them around. Their second-tier operations are doing very well, but they need to resolve the circumstance at Jarrett Canyon.
Okay. All right. Well, thank you very much, Rick. This is always a pleasure. Always fun. I know I thanked you off air, but thank you on the part. Everyone that submits a question, they always write thank you at the end of it. In the essence of time, I never say it, but we're all very grateful.
Well, people need to remember that they can always apply this to their individual portfolios by going to ruleinvestmentmedia.com and submitting their portfolios. I'll rank the portfolios 1 to 10. I'll comment on individual issues if I think my comments have value. I would add, too, if you're a precious metals holder or if you are unhappy with your current bank, in the question and comment section at Rule Investment Media, write bank, and we'll put you on the waiting list for Battle Bank.
Thank you. And, you know, at every, in all the show notes of all the shows I do, even if you're not in it, I always have your portfolio review in there
Thank you.
as a link, just to throw it out there and get as many people, you know, information and education as we can. So thank you very much. And, oh, and we can still get the Rule Symposium. It's still available, like you said, to, if people weren't there.
Rule Symposium tapes, or pardon me, links will be available until year end. So
Okay.
if you either attended and didn't have the ability to assimilate 55 hours of programming, or didn't attend and would like to assimilate the lectures at your leisure, go to rulesymposiums.com. They're available.
There will be a link down in the show notes. Thank you very much, Rick.
Great.
And thank you for tuning in, and hit the like and subscribe, and we will talk to you next time.